yesterday. I didn't bore you too much, I hope.
No, it's all good. It's good information.
So guys, Vince is starting with us. He actually had a long career at Labatt in the beer industry. So now he's moving on to the mortgage business. So he's going to be working with Stu Danichuk's team. So yeah, it's going to be a great thing for him. So, yeah, excited for his next step in his career.
Hello, David.
Morning, everyone.
How are you, sir?
Very good.
And Koljit, let's see, there's our new MPC board member.
Morning, everyone.
Yeah. Thank you very much. Thank you, Tony.
And just before we get started, just thank you to all you guys. Like, what a great team that we have. That Koljit was on the board. Just what was your dedication to working with everyone?
No, you just said something.
Great.
Hey, and how are you?
Yeah, rallied around Koljit. That was awesome.
Morning, David.
Good morning. Hey, Patricia, how are you?
I'm good. How are you?
Good, thank you. Just wait a few more here before we get going.
Hey, Dave, I don't think Tony B's coming on, huh?
He said he's going to come on. He should be on around 10. I got him coming at 10:20.
Okay, is he coming on? I don't know. Because he sent the.
there.
Oh, there he is. I see him.
There he is. He's like a chameleon. Just comes in and out. Jeez. My cat is attacking my dog right now. Yeah, my cat's like 11 pounds. My dog is now like 30. My dog runs for my cat. It's pretty funny. So Tina, what are you having for dinner tonight? What are you making?
What I'm making today,
Not about it yet.
not decided yet.
Spur of the
Because it
moment
all depends on
Nice. Awesome. Koljit, what are you having tonight?
Yeah, I'm not decided yet, but my kids, whatever they pick, we're gonna make tonight.
Nice. Well, Tina's always got our mouth watering here, so lots of really good stuff going on. Guys,
Tina's always baking.
Such a stark contrast.
It relaxes me.
Good.
oh yeah, oh nice. So that's awesome.
Leader of this country, and I should just know well, even though he's projecting
cooking is fun.
the fact that the president hasn't conceded yet does have real ramifications for the president-elect. He is not able to tap into some of those transition funds. He is not able to receive the classified presidential briefing.
Awesome. Teresa, how you guys find things, man?
Hey, David. I've actually been off the last couple of days, so
Nice.
it is really busy actually by the looks of things with all the deal inquiries coming through. So that's a good thing. With all our new pricing and everything else that we introduced for the next couple months,
Awesome.
It's made a difference. Yeah.
So can you just go over your pricing, what your new offering is, Rita, just for everyone here, just so they're aware?
Yeah, real quick. We just have a new promo that's going on between now and December 31st for all the submissions, closing by January 30th. We're offering first mortgage pricing from $499 plus 2% or $699 no lender fee, and seconds from $799 plus 2% or a $999 with no lender fee. So that's the start point. And on top of that, if they close the deal 10 days after we issue the commitment, we're reimbursing the cost of the appraisal up to $500.
Oh, wow. That's great.
So, yeah, just a little, fourth quarter comeback, as we call it.
Well, it's crazy though. Like, when would you ever think we would do a second at $799?
Well, here's the thing, and I'm gonna do up a grid on this with all the advertisements that I'm seeing. The reality of it is it's still coming in within the yield range. The yield range being, let's say 9.5 for seconds up to, I've seen as high as 22%. And then first being, anywhere around 7.5, 7.25, upwards to 12% yield. So, however you advertise it, I mean, 499 plus 2. Right, we're at 699 yield. But it's cheap.
It's extremely cheap.
You guys are great. People use you. I always hear good feedback. So definitely use Visa. You know,
I think,
Fiskars.
I think we helped you out on one.
Yeah, my wife did a deal with you. It was amazing. It was the best
That's
one.
right. Yes. Yeah, that's right.
Fantastic.
I'm glad we were able to help on that one.
That's awesome. Oh, it's really good. So guys, we'll just wait a few more minutes here. Just got some people coming on. We'll get going here in a second. Let's get going here. 1 second here.
I think today's a smaller crowd because of the Remembrance Day.
Yeah.
Yeah. Well, and all the lenders are off today too, right? So Reese's
Yeah.
working. Look at that.
No, I'm not. I'm actually just on with you guys, and then that's it. I'm not taking calls or emails today.
Yeah. Now it's my wife was saying it's kind of the last bastion for the banks.
Yeah.
Okay. All right, guys. Well, here we won't
First
be.
National is open.
Are they?
First National is open.
Oh, interesting. Yeah, well, obviously the bigger banks aren't. All right, guys.
Well-
All right, we're gonna get going here. Morning, Marilyn. How are you?
How are you?
Good, thank you. All right. So, guys, I'm just gonna mute everyone for now. As soon as we get started, if you need to just put up your hand, and if you have any questions, just let me know. I'm just gonna unmute.
That's for Situate.
All right.
Yeah, okay, I got lunch.
Okay. So Tony, I just unmuted you, and I'll find Tony B. We'll meet Tony B. Oh, Tony B fell off. Where's Tony? All right, he'll come back. All right, guys. So let's get going here. You have quite a bit to cover today, even though we're on a shortened schedule today. But let me share my screen with you. So yeah, you can see that, Tony. You can see that, okay?
Yeah, it's on.
All right, awesome. Okay, all right, guys. Well, thanks for being on today. Obviously, today's November 11th, so let's go over what we're going to talk about today. We're going to do some quick updates. We have some audit stuff. What's happened with interest rates, some interesting stuff in the bond markets happened in the last couple of days you need to be aware of. It could be coming up. On the fixed side, we'll talk quickly about business planning again. Next week, we have the big session with Wayne. We're doing our first national session next Wednesday at 1 o'clock. So next Wednesday, it will be 1 o'clock for sure. Michael Solomon's going to talk about investment landlord tenants updates. We're going to do at 11 a.m. We'll do a moment of silence. And then we have a lender update, how to do B lending. We have Community Trust. Grant's going to be here from Community Trust talking about what they're doing and new stuff. I think he has another couple of his BDMs coming on today. So yeah, lots of really good stuff. All right, so what's going on? Out of province deal. So this has kind of been coming up a lot. Tony B is going to talk about this in a few seconds when he comes back on. I know Tony sent out an email this week and it was, some people misread it. Basically, can you do out of province deals? Yes, you can. How can you do them? Well, you have two options, okay? One, you can use the hub, okay? So the hub is set up for BC. Sorry. So Tony B's back. Here, let me go find Tony B. 1 second. Oh, that's me. Tony, you don't have your, I think that's you, Tony Guest. Tony, can you hear me?
Yeah.
Okay, there you go. All right, so let's go. And Tony will correct me in a second here. So two options. You can use the best, easiest way using the hub, right? They can do it for deals in, it's usually the biggest one. So BC, Alberta, Saskatchewan, and they have a referral for Quebec, which is your biggest ones. So you just treat it like a regular deal. They get it done for you. You can do it that way as well. Secondly, of course, in the provinces that they're not registered in, you have to obviously use an agent licensed in that province. So you can actually go through, get the deal done, or work with that agent, because we will need a disclosure signed by an agent in that province if they have a disclosure document, right? So yes, you can do them, but yes, you're licensed to do deals in your own province, but we have the option, you can do deals in any province you want with us. You can even get licensed in other provinces if you want. So the nice thing is, so it's BC, Alberta, Saskatchewan, who has all his reciprocity, Tony?
Saskatchewan, Manitoba, and I believe Quebec's got an easier version now. I'm just trying to finalize it in English versus French. So I think there is
Okay.
something coming through there as well.
So you can
Nova
have,
Scotia, just for anyone who's interested, Nova Scotia is changing their rules November of next year. Different licensing requirements there as well.
so what you can do is if you are doing a lot of deals in another province, you can get licensed in that province. So those provinces we just listed, they have a licensing reciprocity. So it means you can apply for a license there and you don't have to take their course because you are a resident of Ontario. Okay. So if you are doing a lot, we're seeing a lot more out of province deals about what's going on. So, you know, if you are seeing them, just let us know about what's going on. Yeah. So there you go. So then Breeze is talking about some stuff about what's going on in BC. Yeah. So again, main thing, guys, call Tony, myself first, call Tony B. You have an out of province deal, give us a call, right? Or call Justin, call Pat in the hub. But yes, they can be done. You can do them. We're licensed in every province. So that's a really nice thing to have. So you are able to do that for them, right? So that's a really good thing to have. I'll just pop into it now before we get too far. Yes, you have an agent in that province. Sorry, a second to do it, to sign off. Training, we have, again, lots and lots of training going on, just if you weren't aware, especially for the team leaders and franchise owners for your newer agents. This week we have deal processing 101 running. So basically taking through people how to do everything from deal submission all the way to deal funding, right? So that runs every month. And every Wednesday at 1 p.m. we have now new boss training happening, right? So if you need to get enrolled, just email training@mortgagelines.com and CC myself or Tony, and then they'll get you enrolled in those programs, right? So every month, of course, we're running the deal processing 101, and we're also doing, pardon me, it's an onboarding. Was it onboarding, Tony? Was it called?
Onboarding.
Yeah,
Yes, Kyle Erickson.
yeah, with Kyle, and Yasmin is doing that as well. So that's the week before. So again, it's meant for newer people. If you want to jump on, even for, like, I've had a couple team leaders and franchise owners jump on just to give them a refresher so they know the material and the content we're handling, no problem, right? But lots of stuff going on about that. Rate risk just went up. So I don't know if anyone saw this week, the bond yield shot up like crazy on Monday after Pfizer announced their positive vaccine trials. So the 5-year rate swap, the CMB bond went up to basically a 5-month high. When bond yields jump, of course, fixed rates mortgages could jump. So if yields rise materially more from here, probably could see 5-year rates kind of creeping up a little bit, right? So lenders are, I've heard a couple lenders already advising currently that rates could be kind of coming up in the next little while. I don't know if Breeze is on as well. Just on it. Breeze, are you guys seeing any pressure on rates at all? As of yet?
Can you hear me? Oh,
Yep.
Can you hear me?
Yep.
Okay. In our space, the pressure on rates is actually to go down.
Okay.
Yeah, it just depends on the, it's a little bit different setup, right? Because demands of
Yep.
the investors themselves. So, when it comes to paying the returns to the investors, nothing's really changing there at this point.
Yep.
So it is a little bit different. Yeah.
Cool. Yeah, so right now the whatchamacallit, so lenders are really looking at advising broker rates again on the A side. Rates could be coming up. So you know what, if the a bond yield, it goes above 0.5 to 0.6, that's usually when, like, the band where they see rates kind of going up. So just watch that. So if you go to mortgagedashboard.ca, that's a really good place. That's an MPC thing to use it. Plus, there's a good article I put up from Rate Spy as well. So I'll put this up in sorry, in the chat here so you guys can see it. Sorry, 1 second. And it's a good, again, share it with your database, talking to your clients, going in and talking to people and saying, hey, rates, there could be some upward pressure. If you have some deals sitting on the fence, maybe talk to your clients about, getting those apps in and getting those rates fixed, because we definitely could be seeing some, whatchamacallit, chat here, sorry, 1 second. We could see some upward pressure on rates, so that could be happening. So there is that is up in the chat. So if you need that, so yeah, I would put it up there. Make sure you read it. It's a really good read as well, just to give you, again, a good understanding of how rates are where rates come from. So it's a really good read. Rates Spy always has some really good stuff. You should be on there probably every day. What else is going on? CMHC has been yielding market share to Saigon or Saigon? Sagan. So the market share of the private insurer keeps rising. The company now pegs it's at almost a 30% penetration rate for the industry. That's a 4 to 5 point increase over last year, which is quite large. Again, of course, before CMHC stopped allowing higher debt service limits, about 35% of Saigon's transactions insurance was to borrowers with GDS ratios over 35, ratios over 42. Now, thanks to CMHC, they're now at 41%. So of course, they're seeing a lot bigger market share, right? So which is no surprise. Obviously, Evan is not that happy about that. Is that the other insurers didn't follow suit, or that the government itself didn't change the rules. He thought it should have happened across the board. And surprise, surprise, it looks like his prediction of real estate prices falling in the fall by what did he say, Risa? Probably like 20%, give or take, right? So yeah, he was bang on.
Yeah, it's a little off.
A little bit. Now again, we could see, but he had pegged October, November
Yes.
for the big fall to happen. He then went down back to 9% of a decline. But yeah, we're not seeing.
It's really regional. Yeah, it's very regional when it comes to. Are we talking values?
Exactly. Yeah, values.
Yeah.
Sure. Yeah. He talked about
Very regional, guys. We just had a file where there was a discrepancy of about $70,000 from the appraised value and what was expected. So, again, very regional. I think that property was downtown Toronto. So.
Well, the only way I think the exception that you're seeing is well, maybe it could be a condo, right? Because condo prices, they are, so in that price he is right? So condo prices, the amount of listings on condos is crazy, right? So, and I think a lot of small condos now are people are looking at them a bit differently, right? So those are ones, because right now, again, I was talking to someone yesterday. He's in the IT industry and he's relocating. He's finding a new position. It's like, now guess what? I don't have to go downtown Toronto anymore. It doesn't matter. So that has changed quite a bit. So yeah, so that is definitely up, guys. There. Okay, I'll this. Audit update. So Tony will touch on this as well. So here, Tony, why don't I just get you to take it from here? You're unmuted. You sent out a few emails in the last few days in terms of out of province deals and keeping communications with clients. So if you just kind of want to maybe talk to those two.
Yeah, I'm not trying to scare everyone, just making sure that we understand what's expected, especially when customers elevate a complaint to FSRA. All of the communication that you have with that customer is really what is required in terms of being able to respond correctly to FSRA. And that does include the fact that a lot of you text messages. And again, it's not for the customers where you think there's going to be an issue. Most of those are non-events. So that's really not what I'm looking for. But we've got situations where customers will claim and then they'd be able to prove that they've emailed the agent documents. Those documents are not the same ones that are at the lender. Well, obviously there was a change somewhere in between, and you need to make sure that you retain some sort of chain of control. It's almost like that evidence, the police, where did the evidence come from? And how do I know you never changed it? So you want to make sure at all times, all documents you get are from the customer in an email format so that you can prove that it came to you, or make sure they're initialing anything that you're sending to a lender to prove that the customer is aware of what was sent. Got another situation where a deal was canceled on closing because when the customer filled in the lender form, it didn't match what was on the application. Again, another claim coming through in the sense of, well, where did the discrepancy happen? Fortunately, the agent had an email from the customer where they actually clarified their position. So I'm not sure where the discrepancy happened, but it had nothing to do with the agent in that case. But communication is key. And that concept of recognizing that you're only allowed to transact in provinces where you're licensed is so that you're aware of certain rules. Email communication for you might seem out of the norm. In Alberta, it's expected. There is no discrepancy there. In Alberta, you must retain all communication, including your email communication. So basically, agents are printing them and uploading them as a PDF. And so use an email chain versus sending out multiple emails. I hate when you get pieces because you don't know what they're answering. Yeah. So do your best to control it. And if you're having, some people tell me they have hundreds of conversations. That just means you're not getting all of the correct information at the beginning. You don't need to have that many conversations with anyone. You should be able to get that information as concise as possible right at the beginning, and that will definitely help. So as David said, it's not a matter of saying you can't transact in other provinces. It's making sure you recognize it. Just came across a different rule in Quebec where now we have to validate and verify if you simply deal with a customer electronically as opposed to meeting them in person. We have to now have record of what number of customers we met in person, each individual agent, and how many of them were 100% seen digitally. So as I said, every province does tend to have different requirements, and that's where making sure that it's not just that you can do the deal in a different province, is understanding what the provincial regulation is, because you know, each mortgage industry is regulated provincially, not as one national coverage. Okay, so you'll see some more things going out. We're going to make some changes to private mortgages, not to make it more difficult, just to make it easier to follow right through with reference to what the requirements are and to protect you in the end. Ultimately, it's all about protecting everyone, and we'll go from that perspective.
Awesome. Cool. All right, now, can you hear me, Tony?
Yeah.
Sorry, my computer is freezing and it won't let me share my screen. So, which is fun. Where are we going here? There we go.
I can hear you. We can hear you.
Oh, there we go. Okay, sorry guys. Come on. There we go. Okay. All right. So let me share my screen. All right, guys. So just to touch on what Tony was saying, you know what, when you are working with a client, sorry, my computer's being really slow, and you're doing any communication log, right? So what I would suggest is try to use instead of texting all the time, try to use an email address, right? So as Tony said, try to use your Mortgage Alliance email address, preferably, because that's always going to be saved on the server, right? So it's going to be there basically. So if anything ever happens, there's no dispute. Or also good, you know, in using Safe Docs and Mortgage Boss to get people to upload their documents, okay? So you can upload, there's a trail, everything is saved there. Come January, mid-January, we're gonna have clients their own portal, so they can actually upload documents directly through a login, so it's a lot safer. So just, again, using an email, try not to use like a Hotmail, Gmail maybe, but, you know, have like a legitimate email, and, you know, don't be giving your client mortgage advice over texting. Again, it's a pain. You know what, you want to have a trail, as Tony said, to cover your butt, and you're going to know those deals when they come up, and it just doesn't make sense. They're going to do something, and sometimes you just know what they're going to look like. So Sean's asking, how do you Safe Docs? Actually, Sean, give me a call afterwards. I can show you. It's pretty easy to use it when you're doing it. It just give me a call afterwards. What we can do is we can touch on it next week. But yeah, it's very, very easy to use. It's awesome. You can send your client a link. They can upload everything, and it also covers your butt, because there's an absolute trail. Tony will love it if you do. Tony B and Tony L, because then this way there's a complete log. We know clients upload it. They have to actually then, when they upload it, they have to click a little thing. I declare all these documents are true and accurate and whatever. So it's the onus is then really good for us. If we have any problems, Tony will give you a big hug. Tony B will, if he gets a physical call and you're uploading via Safe Docs, right, Tony? Yeah, so Tony's there. Okay. All right. So just quickly before I bring Michael on, I want to quickly talk about a couple things. When we're doing here, sorry. Sorry, 1 second. Quickly talk about negative interest rates. Okay, so a lot of talk about out there. What is negative interest rates, right? So could it happen? Might it happen? Well, first of all, talk about what it is, right? So a negative interest rate basically kind of operates in an upside down world of banking. Basically what happens if you put the money in the bank, instead of them paying you interest, you get charged money for keeping money in your bank account, okay? So basically what they're trying to do is say, hey, you know what? We don't want money sitting on the sidelines. We want it out there working, okay, in different ways, right? So now, we don't know exactly how it works. Instead, basically, instead of having to pay interest on a loan, you'd actually earn a bit of money on it, which is, again, we don't know exactly how that would work out. Why would the government, why would the Bank of Canada, why would they ever bring in negative interest rates, right? Why would this possibly happen? It's actually a couple places in Europe they have it. What they'll do is they'll bring in negative interest rates in the most dire of situations. So a pandemic, I think would account for that. Basically, it's meant as a really kind of extreme method to get people to spend, right? I don't want to don't keep any money in your bank, because if not, it's going to cost you money. Get out there, borrow, put money out there in the economy, get the wheels moving, right? So that's what they want to see. They want to get inflation back up. They want to see people spending. They want to see the economy working. So that again is normally when you see negative interest rates. Could it happen? You know what? It's Bank of Governor Tip McCallum was talking about in the current situation. It's not something that they're thinking about to be very helpful. In fact, he thinks it could be disruptive, but it is in the toolkit. So if the situation were to dramatically change, it is something that we could consider. That's what I meant by never say never. The bar would be very high to do that, and it's not something we are currently discussing. It's not something we discussed at our most recent policy deliberations back in October. So not really on Tip's mind. If we do get another, like they have one more kind of, if they cut again, what they could maybe do, because it's still, instead of cutting by a full 25 basis points, they could maybe cut by 10 or 15 basis points. The Australians are currently contemplating this. Do I think it's going to happen? I don't know, Tony L. You could talk to. It's just, it looks like things are coming around with the new vaccine, and now they're looking at other stocks coming up. I don't know, Tony, what do you think?
I don't think much is going. Not yet. I don't think so. Not yet. No, the economy is near the bottom, but like it's coming out right now. You know, so I think it's all good news going forward. So I don't think it's gonna get any worse.
No, yeah, it's funny. You know, yeah. Whoever thought we could have seen negative interest rates out there? It's pretty crazy. I don't know if I think Claire on the call. Claire, are you there? Can you hear me? She said something.
Well, with the look at the 5 years, less than 2% for variables. I mean, take advantage because it's not going to stay like this forever, right?
Yeah,
Even
exactly. So,
2%.
Guys, so just talk to your clients, say what's going on. But again, it's not something that could happen. But again, it's just good to know what it is, because clients may be asking you, what are negative interest rates? How they work? I'll send out this presentation today so you guys have it, right? So quickly before we move on to Michael here, and if my laptop wants to unfreeze. I want to quickly again touch on business planning. So last week we got into this, I went into more detail, but what I want to kind of prepare you for next week. So next week we have a very special session with Wayne Einhorn. We're on next week. For sure. Next week it's Wednesday at 1 o'clock. I want you to become prepared, because he's going to be doing a very detailed business planning session for you. I want you to come prepared to ask some questions, right? What's your current volumes this year? Are you going to hit your targets for this year? What worked this year? What didn't work? What activities did you do to meet your goal this year? Did you do them? Or what did you plan to do? What did you actually do? And lastly, okay, what got in your way? And then most importantly, I want you to talk about what is going to be your target for next year. Okay, what's going to be your target? How much you're going to do? So that's a really big thing to have for next year. So I want you to come prepared for next week, to have these things ready, because next week we're going national. So it's probably going to be our biggest meeting of the year. We're going to have Wes join us as well. So it's going to be a really great session for us. So we'll be right across Canada, and it'll be next Wednesday at 1 o'clock. Okay, guys? All right. So now I'm going to turn over to Mr. Michael Solomon here. So let me find you here. Michael, how you doing, sir?
I'm good, thank you. Do you have a few minutes? My you're not going to believe me when I tell you this, but my alarm's going off at the house right now.
Oh, lovely. That's not...
So maybe if you want a detour from me and circle back with me, that would be great.
Okay, no problem. Actually, I'll see if Grant's on. Yeah, you may not be, but if not, the answer. All right, guys. So let's talk a bit more about business planning. Okay, so let's go here. Michael, just let me know when you're good to go. So last week we talked about, okay, so getting in here, let me share my screen with you. That would help. So you can see it there. Okay, awesome. Right, so we'll get you a bit more prepared. So again, so really, it's good to have reflection. What worked for you for this year, right? What worked, what didn't work? What's, really kind of focus on it, because especially if you're spending money on stuff, right? It's good to have an idea to say, okay, I spent money on this, I did money on that. What actually worked, right? So what is going to, was it a good spend? Like I spent $5,000 on this, or 2,000 on this. what could you do different? Did you get a return? How many deals did you get from it? Right. So sometimes we don't take the time to look at, and I know we're all busy right now. The market's so crazy. Let's look at, okay, and then that's going to lead into, okay, what's going to happen for next year? I know there's a lot of uncertainty. I think it's going to be a great market for us. I don't know, Tony, what do you think is going to happen next year?
Well, I think, you know what, the market seems to be doing well. I mean, just to touch up on your point here for next week over here, I always look at it this way here. We're always so busy. You want to get from A to Z. We're always so busy right now, especially working from home. So we had to adjust this here, but it's coming to a tail end. So kind of like, it's like a train from getting from A to Z. Sometimes you have to get on that train. We're going so fast. You got to stop. You got to get out, get off the train, do a 360, see how far you came, and make sure you're on the right track before you get back on and keep on going. So whatever didn't work, don't continue doing it. My suggestion is there's a lot of top agents here, on the call with Mortgage Alliance, ask Dave, ask for different advice. If it doesn't work, don't continue doing it. If you can do the same thing, you can get the same results. So before you get back on the train, make sure you're on the right track, okay? Because time goes by fast. I mean, we're all working, we're doing Zoom instead of, in-person meetings. Is a little bit different, but as I said, this is gonna pass, maybe sometime next year. Then you know what? You need to go out, we gotta do some changes. So we'll just manage what we have right now. But don't do what doesn't really work, and you gotta be really honest with yourself and explore different options. So next week, Wednesday, I think Wayne will do a great job. Wayne Einhorn will do a great job.
Yeah, guys, and that's the thing. And Tony and I are here for you, right? So if you want to do like a business planning session on the Zoom, or we're very, it's good to really put some rubber to the road here. So we're here for you. Awesome. So I think, Michael, you're good to go.
Yes, I'm so sorry about that.
No problem.
You okay? Everything okay?
Everything's fine. It's just the fire alarm testing company, I guess, decided they wanted to come in but didn't tell us. So
nice. Awesome, guys. So this Michael Solomon, he's a licensed paralegal and a notary. So he does lots of different stuff, and he's going to talk today about some insight about kind of landlord tenant issues in the rental market and stuff. It's a really good thing for all of us to know, because obviously it's a very, I think out in BC, they just announced they put the rent freeze on until next July or something like that. That just came out. So it's just interesting. So Michael, thank you for being on the call today.
Absolutely. No, thanks for having me. Yeah, we're definitely seeing some interesting things happening with the Landlord and Tenant Board right now. So what we saw about a week or so ago is they sent us out a notice about advanced resolution for some of our cases. Yeah. So we got about 6 pages worth of cases listed saying, advanced resolution this because guess what? We don't have the time nor the capacity to handle the entire thing. So now they're coming to a point where they want, to push everything out of the system into advanced resolution, where they can just issue orders right away, as opposed to having hearings, which is nice if we can get advanced resolution from the other party. I know Ontario is also looking at completing a rent freeze for 2021. I haven't seen anything concrete as of yet. As soon as we know that, obviously, David, you follow me, so we post every day, right? So as soon as
you guys do a great job.
Yeah, you guys will know too. The other good thing is the orders that were received from Landlord and Tenant Board before that couldn't be enforced are now actually being enforced. A notice to the profession went out about maybe 2 weeks ago or so saying, okay, legal professionals, we recognize, you're sort of sitting in limbo and you need to get your work done. Here's how we can do it. So we can now electronically file things with the court system, which is better. Before, we used to be able just to electronically file, a plaintiff's claim or something like that. But now we can actually take those Landlord Tenant Board judgments and transfer them over into small claims court by way of electronic transmission. But that can only be done by a legal representative. It can't be done by an individual at this time, because the email system is secure with the Ministry of the Attorney General, so they know which legal professionals are emailing them, right?
Okay.
Yeah, so there's a lot of forging ahead happening now, as opposed to when this pandemic started. We were all sort of up in arms, going, "Oh my gosh, what are we going to do?"
Yeah. Big time.
I just want to let people know that the government's working as quickly as it possibly can to come up with some sort of assistance for landlords. Unfortunately, the sad part is on the tenant side, if you're filing an application with Landlord and Tenant Board, that's likely going to be heard first than the landlord side, which is very, sort of biased, if you will. But the only way to really push that forward now is through the electronic transmission of documents. And really quite sad, we often see a lot of landlords coming into our office with monies that are owed that are outside the monetary jurisdiction of the Landlord and Tenant Board at this point in time, because the COVID has been going on for so long now that if we were to bring an application to the Landlord and Tenant Board, it exceeds the monetary jurisdiction of the Landlord and Tenant Board. But at the same time, the Superior Court can't hear to an eviction because it belongs in Landlord and Tenant Board. So it's kind of that catch-22. And when I say that, I'm saying these are cases where the landlord is owed more than $35,000.
Oh shit,
It's a lot.
from one. Wow.
Yeah. I've had people coming in here 45, 50,000. These are the guys that, they're renting out their homes, in Toronto and Markham,
Yep.
those hot pockets where they were getting $3,800 a month for rent, and the guy's fallen 8 months behind on rent or longer than that. And it's so substantial that there's no way out. There's no way out.
Yeah.
And it's very unfortunate. The only thing we can try to do is, get each party to work with each other. And unfortunately, sometimes that takes, either a paralegal or a lawyer to become almost like the intermediary, saying, okay, how can we make this better for both sides? Tenant, you can't afford to be here. And landlord, you're going to lose your house because your tenant's not paying. And the only other option you have is to remortgage.
Yeah.
We don't mind doing that for them either.
Well,
but case in point, you can't have these these extreme amounts of money outstanding and not be heard at some point in time, and it's just unfortunate.
That's crazy. Wow. Yeah. So what's in terms of that? So right now, if you have a tenant who's behind, like what would you advise? Kind of what's the best course of action to do right now?
Right. So actually what the Landlord and Tenant Board has done is they implemented a new procedure. So we still have to go ahead and issue what we call the N4, which is the notice to end your tenancy, saying, hey, you're behind on your rent, get out by this certain date. Otherwise, we're going to have to apply to the board for an eviction.
Yep.
Which is going to take forever anyways. But what they've done in between that time period where they say, okay, here's your notice to evict, and here's the application to start the eviction.
Yep.
They've now created something in between with a payment plan schedule. So you actually physically have to try now to get the tenant to go on a payment plan schedule. If that payment plan schedule fails, then you can go to application.
Wow. And that's
trying to keep everything as far out so that only the most serious matters are being heard.
Yeah, and at that point too, it's so serious. Are you ever going to get your money back? That's a problem, right?
And in that, with all due respect to our judicial system, is the prejudicial bias of the landlord.
Yeah.
So Michael, that would be a reduced rent probably, right? Negotiated, maybe something more reduced, right? Would that be or no? Well,
so Tony, what it is, if your rent's $1,200 a month and you're, I don't know, $5,000 behind, we're going to take the 5,000 and divide it over 12 months and add it on top of the 1,200, but you're probably not going to be able to afford to pay that either because you can't afford to pay the 1,200 now.
Yeah.
Right. So it's almost like setting them up for failure anyways, which I don't think the Landlord and Tenant Board and, those guys sitting behind their desks have really even thought about. you know, we as finance professionals as well look at, you know, TDSR and those types of things. And we do that here too, where we'll say to the tenant, okay, we're going to do a financial capacity assessment on you. I need you to bring me in your pay stubs and your employment letter, and I need to see where your money's going. It's almost like, you know, when you go to the trustee and you're about to file bankruptcy and you're filling out the form to say, this is what I spend my money on, because that's essentially what we have to do to see whether or not they can even afford to stay. And if they can't, you know, you're just setting them up for failure anyways.
Yeah, exactly. Yeah, and that's like, you know, like I had at least I had one tenant once, and he was behind. I said, like, you obviously can't afford this place. It's not working out. Let's get you moved on.
Mm-hmm.
So question here. So he's asking, so what is the timeline from the time from the tenant gets the first notice you are late in your rent payment to the M4 to the payment plan letter to the landlord tenant board?
Okay, so so what happens with the N4 notice is landlords should be issuing that the day after the rent is due if they don't have the rent in their bank account. And I always say that because it's so important that even missing a couple of days puts you potentially a couple weeks behind. So what I always advise my clients is, when the rent is due and payable on the first of each and every month, and the second comes around and it's 9 a.m. and the money's not in your bank account, start issuing the N4. Okay. Then they have 14 days to bring the N4 up into good standing. So it's 14 days from the date of service. Okay. So Edith, I'm going to elaborate on that 14 days in the service date. If you send it out in the mail, you have to account for 5 days worth of mailing time. So now it's 19 days.
Can you email it, Michael? Can you email to them?
If it has been consented to in the new standardized lease forms from 2018.
Okay.
If the lease is prior 2018, then you have to send, you either have to hand it to them physically, or you have to send it in a courier, you have to send it in the mail, drop it in a mailbox, slide it in the mail slot. There are several different ways to do it. Email only came into effect in 2018 when they changed the standardized lease, which leads me to say that, you know, if there's any brokers on here or agents on here that are also real estate agents, please make sure that you're using the new standardized lease from 2018, because you see a lot of real estate agents still using the forms from OREA. And just so you know, that an individual landlord can receive a fine up to $25,000 for not using standardized lease form. So it's very important, because as a legal professional, and I say this with all due respect, if that was my client as the landlord, I'm going to be looking at the real estate agent for contributory, for something in a contributory negligence tort, to come back on them for that fine that landlord received from the landlord and tenant board.
Yep.
You know, it's very important to use that new standardized lease form. So Edith, I hope that sort of answered your question with respect to timing and service. After you get the, yeah, exactly, Lauren. Some landlords don't even use leases, but the new law says you have to have a signed lease within 30 days of actually renting out your property. So if a tenant doesn't get a signed lease, the tenant can apply to the board for a tenant's rights application for an abatement of rent for not receiving his lease. And he could also have the landlord fined as well. So I agree, Lauren, some landlords don't use leases, but they need to start learning.
That's crazy. Well, yeah, and so like I have had one person come up and like, and so what would be the situation? Like you don't have you don't have a lease, and the tenant's been paying you cash, right?
Mm-hmm.
And something goes wrong. And I had one guy say, oh, you know, you could just go in and say, oh, I have a friend living there. I'm asking to get out. Now you won't get out. Like how would you approach that if like you just, like, I've seen people just take cash.
Yeah, this is really hard, because actually we have a client that we look after that does this, and I keep telling him stop doing this, but they don't listen. And what I end up saying to the tenant is, okay, give me the bank statements that show me that you're withdrawing the money to put in the box, or handing to your landlord, because we know roughly what that amount is going to be.
Yeah.
Those people won't walk around with, if the rent's $1,800, you're going to withdraw $1,800 from the ATM. You're not going to withdraw 2,000. Or if you are, you're taking out an extra $200 for yourself. But there is some reasonability there to suggest that, if he's taking it out, on the 28th, 29th, 30th, 31st out of his bank account, obviously he's using that money to pay his rent.
Yeah.
Remember, this isn't like criminal court where we have to prove, beyond a shadow of a doubt. We just have to have on a balance of probabilities that it may or may not have occurred. And usually, if an adjudicator can see a pattern, seeing that, John Doe was taking $1,000 out every month, but his rent payment was $1,800.
Yeah.
They're gonna be like, okay, well, what'd you do with the money? Obviously give it to the landlord, right? So the other thing that a tenant should be aware of is, and landlords, if you're accepting cash from your tenants, you should be providing them with receipts. Even if it's something small on a sheet of paper that just says, received from John Doe on this day, this much, and signed, and you're good to go.
Yeah. So that.
Sorry, I got a question for you, Michael.
Yeah.
So right now, suppose if you're a landlord and you mentioned next year there's a freeze, and just say they're paying below market value. Maybe the market value is say $1,800, and you're charging during the lease $1,400.
Mm-hmm.
What can you possibly do if you're a landlord? You want to increase the rent, but you can't. And I know a lot of people ask, oh, maybe I'll just say I'll take it back for a family member or whatever situation like that. Legally, or how can you get the rent higher to bring it to market?
The only way that you'll be able to get the rent higher to bring it to market is if you apply for an above guideline increase, which is something our office does do for landlords. But that above guideline increase has to be so substantial. And for example, what I'll use capital expenditures. So, if I put a $500,000 roof on my building, actually, which one of our clients did, then I'm able to apply for the above guideline increase. If I spend $50 to change a faucet, I'm not entitled to those capital expenditures on an above guideline increase because it hasn't substantially affected me. If my property taxes increase 40%, then I'm entitled to a above guideline increase. But it's having to, if the rent freeze comes into effect, what it's going to be essentially, Tony, is we're going to end up having to go to the Ontario Court of Justice and appealing the order from the Chief Justice saying that the rent freeze is happening. And we have to prove that an above guideline increase is actually required because of XYZ, right?
It'll be difficult.
It's going to be a challenging time.
So what about Michael? I had actually one of our clients actually they're doing they actually put a new roof on the rental property, and now it's a single family, so it was like $6,000. Is that something you could apply for?
Yes. Yeah.
Okay. All right. So what's kind of the threshold in terms of like something major structural, or like is a certain percentage of the property value? I guess you'd probably look at just to see if it's
So for above guideline increases, it's actually really complicated. What we have to do is we have a certain table that we have to follow and go by. But if it's something that is substantial, like a roof replacement, new windows, you need to repair the foundation, it costs you $20,000. Those types of things are anything that is capital expenditure increasing the value of the property, in addition to any expense that is so substantial. So like I had suggested, a substantial land tax increase would be something that would qualify for that. But what we have to do is we actually have to take those expenses over time. We have to amortize them, then we have to divide them out. We have to figure out the capital expenditure rates, and we have to then figure out how we can increase and what percentage we're entitled to. It's actually, the last one we did took us probably, I'm going to say, about a month and a half to put together to take to the LTB because it is so substantial. Yeah.
Wow. Yeah. So if it's just, so it would cost you more than it's worth. Yeah. Now what, like, is it, what would they normally look at? Like, would you get like almost up to market, or I guess it's just all based on the dollars, right?
So what they do is they cap the increase every year. So for example, one of my clients, is still getting the 2.2% from this year.
Yep.
However, on top of that, they're also getting 5.2 on top of 2.2.
Okay.
So you're getting 7.4% increase. Now my clients spent close to $2 million in renovations on their property.
Yep.
So it's justifiable. A 7.4% increase is justifiable on a $2 million capital expenditure to bring the property up into, you know, good standards, right? But it's all, you know, part and parcel of what it qualifies for. And we have a table that we have to go by that the Landlord and Tenant Board has that allows us to suggest what those increases could possibly be.
Wow. Yeah, that's crazy. So obviously now it's when you're putting a tenant in there. So obviously now you have to do greater due diligence. So what would you suggest when you're screening now? Because obviously right now, if you're putting a tenant in there, you have to be a lot more careful because you get the wrong person in there, you're screwed.
Yes, yeah. My not to toot my own horn, but my biggest suggestion would be to just call Saul. And I have access to all of the computer data banks where I can go back and I can look through the landlord and tenant database, and I can see whether or not that tenant has ever had any landlord and tenant issues previously.
Yep.
Our office for landlords does all of the Equifax screening, the landlord tenant board screening, the financial capacity assessments with the TDSR, the GDSR, the affordability of the rental unit. You know, we also look at anything that has to do with any criminal activity. We have access to that as well. So we can do all of those checks within a matter of 2 days. And when they come back, then you're going to know whether or not it's a suitable tenant or not, right? Because you're not going to want to have, you know, you may not want to have Mary, who's been to the landlord and tenant board 6 times because she looks like, you know, a bit of a pain, but you wouldn't know that Mary was a pain because you don't have access as a landlord to look to see whether or not Mary's been there before.
Well, that's something you wouldn't know, right? Because that's a big thing, and especially now, like, you know, it's bringing a professional in, and like, you know, you maybe like what I would maybe suggest is, guys, you screen your tenants down to maybe the last 2 or 3, and then you send them in to Michael to, you know, get your top choice or the one you really think. Because sometimes, just like in our business, someone could look great. We pull the bureau, something comes up, and you know what? Then you're holding the ball there for sure. That can be terrible.
Yeah.
So what?
We're very fair on our price on what we charge for tenant screening. So for each applicant, we charge $250 plus disbursements.
Yep.
And those disbursements cover our search record costs. So our database charges us to look. So it's only fair that we pass that cost on to our customer. So
let me actually. So are you allowed to charge an application fee then when you're working with a tenant?
So what you can do is you can charge an application fee, but it has to be refundable. So if they don't get approved, you have to be able to refund it. You can't, a landlord cannot, and I quote, unreasonably withhold rent or that kind of stuff. So, you know, you can't take a deposit that you're not entitled to. So these are things like applications, key deposits. And I'm saying key deposits because I know people have condos that they love to rent out. And I know that those condo keys are very expensive. But the only way that you can take that sort of deposit is if you've got a bill of receipt on how much those keys cost, but you have to be able to refund that when the keys come back to you. Okay, so there's lots of rules. We're happy to, you know, talk with people, give you, again, I always love helping Mortgage Alliance brokers and clients. Same thing that we did last time, and give you half an hour free. Just give us a call. We'll set you up an appointment. We can do a Microsoft Teams meeting or a Zoom call just to help guide you a little bit.
Yeah. So before, guys, so Michael will he'll put up his contact information again. We'll put it up on the group Facebook page so you have it. So what other stuff kind of like would you know what, if you're looking at buying, you know, a rental property right now, like what other things are you saying, just a little tips for landlords that you would give right now considering the times?
Yeah, my only other tip is at this point in time, be very, very careful as to you know, who you're getting in there. you know, the landlord and tenant board is so backed up that, you know, unfortunately, if you're not screening your tenants properly, you could end up in a situation where you're 14 months before you get a hearing.
Yep.
You know, we filed applications not August 2020, but August 2019, and I'm just having them heard now. So, yeah.
Wow.
I know,
Wow.
right? Well, you think August 2019, right? September, October, November, December, January was COVID. January, February was COVID, right? They were already 6 months backlogged anyways back in
Oh my God.
So now you're at a point where you're like, oh my gosh, now we're in 2020 and it's November and I'm just getting a hearing.
Yeah.
So, you know, and sort of you know, there's what argument are you going to use really? You know, the judicial fairness, sure. But you know, you really can't use, you know, we have a precedent that we use called RV Jordan, which says that you're entitled to trial within 13 months of filing. But I don't think in a global pandemic you're even going to get remotely close. There's so many people that are so unfortunately behind in their rent that it's backed up the system, or that there's issues that have backed up the system, right?
Yeah,
No,
I got one question before 11 o'clock. We take a pause. Suppose you want to take back a unit legally and you really want to use it for a family member. Now, suppose you take it back. That means suppose you take it back, the tenant leaves, and then all of a sudden 6 months in, oh, so-and-so doesn't like the unit and you want to rent it. Can you rent it or you have to wait the 12 months?
You must wait the 12 months. If you're going to re-rent it, you best be hoping that your tenant that was in there previously doesn't see it.
Okay.
Yeah,
Okay.
because it's
Entitled to damages.
Okay.
And those damages can range anywhere from you know, moving costs to the extent of, well, you know, I paid $1,500 to Tony, but then, you know, when I moved, my new rent was $2,000, so now I'm entitled to a $500 difference every month for the last, you know, year, right? It's just it's just something you don't want to get yourself involved with.
So it'd be the 12 months, basically, you can't rent it for 12 months.
Right.
Just lastly, before we go, actually, before we let you go here, we get our moment of silence. So what if a tenant comes in and, okay, they're behind and you do work out a payment plan? So you say, okay, I come to them, say, hey, you know what? For the next 5 months, instead of 1,000, you'll pay 700. But after that, we're going to work that $300 back into your, what documentation or how would you go about doing that if you wanted to give them like a break and then kind of, or just like kind of re-amortize something for them?
Right. So we do have the forms that are available on the LTB website. It's probably better. They are a little bit, I mean, they're supposed to be general public friendly. You know, have a 30-minute consultation and talk to somebody in our office that knows how to fill them out for you. And you know, we'll guide you unless, you know, you decide that you want us just to handle the entire thing for you guys, but they're on the LTB website, so they're available to be looked at.
Okay, awesome. Great. All right. Well, Michael, thank you so much for being on. Now, is there any, before we get one quick minute here, anyone, you can put your comments up. Michael can maybe stay for a few minutes. Can landlord increase the rents to their tenant after the existing tenant vacates to
lease term expired? Yeah, there's nothing saying that you can't increase after the old tenant's left and you've got new tenants moving in. So, you know, if the rental unit was 1,800 with the old tenants, they've moved out, you're able to have the new tenant come in and put it at 2,200 if you want.
Okay, awesome.
Perfect.
Great. Awesome. Well, Michael, stay on for a bit. Michael, if you want to post up your comments, we'll wait just a couple seconds here. We will do our moment of silence in regards to Remembrance Day. So I see some other chats coming up, and we'll do that in 1 second here. So we'll come up. I'm just gonna put my timer on.
You got the video, Dave?
Can't see it. No, I don't see if I've seen it or not. And sometimes doing a video on Zoom, it doesn't work. So we'll just put up my screen here. There we go. All right, guys, we are going to start now. We're going to have a moment of silence for our fallen soldiers. Okay, everyone. Well, thank you for doing that. Obviously, we're very lucky to live in Canada where we are, and we have a great country to be very proud of. So that was a great thing. So awesome. We always remember all of our fallen soldiers and our veterans who have given us why we're here today. All right. So what we're going to do now is I'm just going to turn it over to Mr. Grant Armstrong. Grant, I'll just bring you up here. So sorry, we'll find you there. Grant, can you hear me?
Yes. Hi. How you doing?
Good, man. How are you?
Not too bad, thank you. Thanks for having us on.
Nice. How goes the battle for you today? Look at that. Look at the background all going. Look at you.
Yes. Well, it's either that or clean my basement office. So I figure the virtual background works. So
way better, way easier. Absolutely. Exactly.
So just before you go do it, I just want to thank everyone here for taking that moment of silence. Some people may not actually know I actually am a reserve force officer for the Canadian
Amazing.
Forces. So, and it's probably the first year in a very long time that I haven't attended a Remembrance Day ceremony. So I had the privilege of going to Normandy and Vimy Ridge and seeing some of the stuff that Canadians did. So thank you for taking that moment of silence for everyone. It's incredible that we continue to do this, and 100 years later, it's still being done, and that we don't forget to do that for another 100 years from now. So thank you.
You're right, though. It's funny. Like both of my grandparents, my dad and my mom, they both served in the Second World War, and I've been in Normandy. If anyone's been there to some of the beaches, you step foot on those beaches, and it's just very eerie feeling you get by being there. So yeah, it's you can definitely feel there's a definite vibe there. So anyways, but awesome. That's great, Grant. Well, Grant, thanks for being on today. Grant's obviously from Community Trust. He's going to talk about what's going on with them. They have some really, really good stuff. We've been doing a lot of stuff for them. So Grant, I'll let you take it away. Thank you so much for being on.
Awesome. Thank you. I don't know. I'm going to share my screen. Hopefully it works. And you can let me know if everyone can see that. Can you guys see that okay?
Good. Yeah.
Perfect. So I've also got Heather Fung on with me today as well. Heather is one of our business development managers for the Peel region. So she's on here as well and works with a number of the brokers on the call as well. So she'll be here.
Heather, I just unmuted you if you want to come on. You're welcome to chime in there.
Good morning.
Heather, are you there?
Hi, Heather, how are you?
Good morning, and thank you for having us on. Yes, I'm in the Halton Peel region, so I'm
nice.
one of the business development managers in that region.
Fantastic.
And happy to be here.
Great. Well, thanks for being on.
So wanted to talk a few things about today. I wanted to share a big announcement that we had made recently, how we're working with some new construction properties, and then also take a few minutes to talk about some, 4 or 5 things that you really should know about Community Trust. So I'll just jump right into it. So we've updated our new construction policy, and this is fantastic for anybody who's working with clients that are now coming to a close on their new build. So for new construction purchases with a purchase agreement dated 12 months from closing. So if it's closing now, it's got to be dated November 11th, 2019 or earlier. We're actually lending off the current market value. So what we've seen, especially over the last year, is house values, condo values have gone up quite a bit. So we're allowing clients to take advantage of that opportunity. Our only stipulation is the maximum mortgage can't exceed the original purchase price. So we're trying not to go above 100% financing. So I thought the easiest way is I put a couple of, it is. I thought I put a couple of examples out to show you what that means. So you've got a client that purchased the property, let's say January 2018. They've got a confirmed closing date. So not occupancy, but a confirmed closing date of December 2020. The original purchase price was $500,000. It's now got a current market value confirmed by an appraisal at $575,000. We'll actually lend that client up to $460,000, which is the equivalent of 92% of the original purchase price. And that's with no CMHC or Sagen. I used to work for Genworth years ago, so it's a little hard pill for me to change that name. Doesn't require mortgage insurance. It follows all of our traditional guidelines. And we would do that again as an owner-occupied property approved at 2.99 with a 1% fee. Again, assuming the credit's above 640 and a few other things, but just a quick ballpark. Just another little example on this. So again, same idea, purchase date February 2019, closing date again December, bought for $500,000, now it's worth $700,000. we'll actually lend them up to 100% of the original purchase price, again, at that same great pricing. So we're not looking at adding in, we're not charging any premiums for it. We're not charging any extra fees. And in many of these cases, the clients have already put $20,000, $30,000, $40,000 down. So they're going to be covering that off with that used for their land transfer taxes, their legal fees. They're not coming up with anything extra. And in our previous example, we're only verifying the difference between the original purchase price and the max mortgage. So in this case, we're only verifying 40,000 down. And in this case, there's no down payment required. This is also available on rentals. So if you've got a client who bought a rental condo and it's now coming, we'll lend up to the, again, right now we do 75% of rent on the rental, up to not to exceed the original purchase price. So again, you've got investor clients that maybe were scrambling for that 20% or 25, then they realize they've got to pay that HST and the double land transfer tax. This is a great way of making sure that they keep some money in their pocket to help them out. So I don't know if there's any questions on that part. I will send it to David as well, by the way, afterwards, so you can email it and share it as well.
So can we submit, can we submit the file in a tentative closing dates or only for once confirmed closing date?
I mean, we're only a 90-day rate hold. So, I mean, I'm good with, hey, it's supposed to close January 10th or January 15th, that's fine. But if if it's, hey, I just got occupancy and we're not sure when the closing date is,
yep,
it's not the right experience for your client. Because again, what you're going to find in these transactions is we're going to ask for an appraisal right up front because we're estimating market value.
For sure.
So if it goes past the 90 days, they're going to have to do another appraisal. And if it goes past another 90 days, they'll have to do another appraisal. So
yeah,
I recommend doing it when you've got that firm closing date.
Okay. Another question, Grant, actually, really good question. Do you guys use market rents then? Or do you have to confirm?
We will on a new purchase. Yes, we will use the market rent assessment on it to determine it. Yes.
Yeah. Good question. Awesome. Go ahead, sir. The Grant had a question. Do you do a new build signed in 2018? Well, yes, they technically it's closing the next 90 days. Yep. So that would be fine, right?
Yep. Absolutely. So as long right now, and for the record, we'll do a new build that was signed 3 months ago. We just will use the purchase price, not the appraised value.
Okay.
So that's to take advantage of the current market value. The date of the purchase agreement has to be over 12 months from closing. So again, if it was signed January of 2020 and your closing date's February 2021, that's fine as well. You could even submit that today. It's not from application, it's from closing date. Okay. All right. So I wanted to take a couple minutes and also let you know about 5 things that I really think is important for you to know about community trust. So number 1 is our Insta value. It's very popular with the prime lenders, the big banks. We offer on the alternative lending side an automated appraisal. So we'll do an AVM. Clients can sign it back. The charge is $299, which is deducted from the advance. And that will give an automated valuation of the property. If it fails, then we don't charge the client anything, and we just ask you to get a traditional appraisal. So this is great, especially when you're doing a purchase and you've got a cost of financing that's maybe in a few days. Maybe you tried an A lender, it fell apart there, now it's coming over here. We can do that appraisal instantly. Also great sometimes, again, that we're alternative lending. Some of those clients with some bruised credit might not have $300, $400, $500 laying around to get the appraisal done. We can do the appraisal on a refinance as well. So it's good for purchases and refinances to get that appraisal value done and out of the way. And it's very simple. As soon as you send back the commitment, if it's eligible, we run it through our system and then we get back. We're finding answers anywhere as little as 15 minutes and up to 24 hours maximum. That's just usually because of a tech glitch. Market leading rates. We're very aggressive on our interest rate. So our 1 and 2 year rates right now are sitting at 299 for credit with over 640. But what really differentiates us is how we calculate the rate for a client. So I think we would all agree in traditional worlds, it's typically the higher income person that we base their credit off. So let's say it's a husband and wife. Wife makes $150,000 a year, but her credit's 450. Then you've got a husband who makes $25,000 a year, but his credit score is 800. We will price and qualify that deal off of the higher credit score of all the working applicants. So a deal that we did the other day with the primary income, the higher income earner, had a credit below 500, and our minimum cutoff for credit is 500. But the co-signer, the co-applicant, which was the spouse with a small job, had a higher than 500. We continue to do that deal at 80% financing. So that's a huge opportunity, especially when you've got disparity between the incomes. Another thing that's really unknown about us is our BFS T1 General program. So most people, when you're dealing with an alternative lender, you avoid the T1 Generals, you avoid the NOAs, they're kind of like the plague. They're like, you send it in and it's gonna like just skunk the deal. We don't do that. We actually don't mind. It gives us more tools. So for sole proprietors and professionals, we will actually use 100% of the gross income on the T1 General for qualification. So you get a client who's a chiropractor or a massage therapist, I think is when I saw, they gross 120,000 a year. They wrote everything down to 15,000 a year. We'll use that $120,000 a year to qualify. Even though the NOA is going to say 15,000, even though we see all the write-offs, the best part about it is you don't need to fill out a self-declared letter. Because I've been on your side of the table, those things are kind of like filling out, complicated calculus. So you don't have to fill out a self-declared letter when you use our gross income T1 General. It's simple, it's easy, it's fast. All we ask is the most 2 years T1 Generals with NOAs. We will ask for an invoice or a couple months bank statements only to prove the business is still running. Again, COVID this year, and it's not because of COVID, but as you could see, T1 Generals are from last year. We want to make sure the business is still operating. That's all we're looking for. That's a huge opportunity, simple, easy. You also don't have to worry about understanding when an underwriter looks at bank statements and an underwriter says, well, I think they made 100 grand, and you calculate it, say, no, I think they made 200 grand. You're now looking at the same document. It's very simple and easy. So that's a huge opportunity there. Not a lot of people realize that we specialize in no lender fee mortgages. So on our 2 and 3 year mortgages, it's a standard offer available to everyone. Rates start as low as 3.59 on both a 2 and 3 year term, and we don't charge the client a lender fee on those. And we do continue to pay standard finder's fees. So 2 year is 60 basis points, 3 year is 75. So the brokers are still compensated finder's fee, but it's a fantastic way of making sure your clients reduce costs on closing, especially in the GTA or like in Oakville, Burlington, average price points of $700,000, $800,000, $1 million. You're finding some of these lender fees can be $6,000 to $10,000 on closing. Great way for clients to keep more money in their pocket. Make sure that they're not short of funds on closing. If it's a purchase, it's less closing costs. If it's a refinance, that $10,000 could actually pay out another credit card. And that's a standard. It's available at all of our credit scores, and our rates start. So at 640 plus credit, we start the rate at 3.59 on a 2 year and a 3 year. Okay. The other big thing that people should know is our partners team. So I know we have Heather on the call today. Heather's a BDM, but what we've done here is, we have some great business partners that have a dedicated business development manager to them. And, let's be honest, there's a lot of people, not all the time the BDM has the opportunity to get back to every single person that calls them. And we want to make sure that they have a resource. So we developed something called our partners team. And it's very simple. It's partners@communitytrust.ca. Anybody can email this mailbox with questions, deal scenarios, policy questions, follow-ups. I need to know this. And we've got a team that gets back to people. Our turnaround right now is about 45 minutes on that. I've got a team of people, and that mailbox is manned from 8:30 a.m. to 8 p.m. Monday to Friday to be able to support and answer questions. So if you've got, do you lend here? Will you lend on this property? I'd like to talk to somebody about a deal. I'd like to get an idea of what the pricing would be. This team, you can email them, they'll call you back. They've also got a toll-free number, and we can get that out as well. But they'll be able to call back and say, let's go through this scenario right now. If you've submitted a deal and you want to find out who the underwriter is to get the docs up front to them, purchase agreements, they'll help with that as well. So it's very simple. It's partners@communitytrust.ca. Couple things that are coming down the pipe. So no screenshots because not everybody knows this, but we're updating our rental program as of December 1st. So right now, Community Trust goes to 75% with 100% added to income. We're going to 80% financing, purchase and refi on rentals. And on full investment properties, we're going to an 85% rental offset. No worksheets are needed. I tried to fill one out, got complicated, so we said no worksheet. We'll take care of it. It's a true rental offset. It's not a single offset on a property. It's a true full offset. We'll also be expanding the number of properties that we go up to. Today it's 4. We're going to be going up to 6, with 5 of them being rental properties. So now please don't submit apps for that yet. It is not live until December 1st. But if you want to start teeing up all those rental deals, I'm looking for about 100 to 200 rental apps on December 1st.
Julie, I just sent one in, Grant, 28.
Next, we're also got a broker portal coming out. We are working, it's in its beta testing right now with some pilot partners. And we should be launching it in Q1, Q2 latest. And it will be a full doc system as well. You'll be able to upload documents, receive commitments, communicate. We'll be only, I believe, the second alt lender that has a portal to make it easier for partners. And then we're continuously updating our policies. We've gotten a lot of feedback from our broker partners on what policies and how to make things easier. So we're constantly updating that. We're working on our next batch of updates. So that's it.
Awesome.
Any questions?
Grant, I got a question for you. You know, when you mentioned, I guess on your previous screen about the business for self, on the T1 Generals, you're using 100% of the gross income. So I just want to clarify. So would any of your underwriters ever have to go back to a customer who says, you know, on your T1 Generals, you're declaring 100,000, but yet your net NOA is 25,000. You're not going to go back and ask 12 months bank statement, show me $100,000 worth of deposits.
No, so and that's the whole point of our T1 General program is if you're declaring it and you've got the NOAs to match it up, we are going to ask for either an invoice or 3 months to prove the business is ongoing. But if we're going to ask for if you have the 12 months, we still have a 6-month and 12-month or 6-month bank statement program for clients that don't declare it. But if you've got especially for incorporated clients or some clients that haven't, but our opinion is if you're declaring to us what the gross is, we'll accept that. Your net, that's between you and the government on how you get there.
Okay. So you need to show some invoices, like just to
1 or 2 invoices, or we just want to make sure the business really still exists.
Okay.
Again, the T1 Generals are for last year, and we all know some businesses have shut down, but we're not going to be doing math. So if you're declared with 400,000 and you get a bank statement that shows there's transactions, we're not going to go and say, well, there's only 18,000 this month. That doesn't make sense. We want to know the business is actually ongoing. If there's no transactions, then we're going to ask what's going on. Like, is the business still operating? But that's all we're doing on that is to prove it.
Okay, that's great. Okay, thank you.
Grant, will you guys use T2s for private corporations? We look at a T2?
So we will look at our incorporated clients. We will accept their full financials as well. So we'll use their net income before taxes as 100% of the qualification. So we don't use the T2s. We'll actually just use their financial statements. They have the T2s and we can get through it. We'll look at those as well, but accountant prepared, bookkeeper prepared financial statements, we'll accept that.
Christine is asking, what about for realtors and actually mortgage agents? Will you guys look at those? So commission sales.
We will. We're actually, so right now our commission clients we're looking for the gross revenue off their last 2 years, supported by a year to date. But we're working on tweaking that program as well to be a little bit more aggressive. But absolutely, we will look at the gross revenue for mortgage brokers and realtors. But for them, we're looking for, again, that 2-year history for them.
Do you guys do a 35-year amortization?
No, we're 30 years right now. We've looked at the 35. Something we may bring in. It's I know some lenders have brought out the 35-year amortization, but we want to make sure it's still right for the clients and bringing their equity down. We're still analyzing if it's still the right thing to do. So we're not there yet, but it's something that's on our radar.
Sorry, next question here just came. Can you do, so you guys can send, you guys don't have a sign up with, I think, with the agents. They can just send in deals. Do you guys have a sign up process?
Right. So in Ontario right now, anybody who's submitting under the big brand just
Yep.
submits directly in. So no, unless it's part of a brokerage, we onboard brokerages, but your entire account here has been, as soon as you submit in, the first time you've submitted a deal in, it won't allow you to take an extra hour. Somebody's got to physically go in, validate your license and hit the button that says you're good to go. But that adds about an hour to the process. That's it. But no, we don't require any complicated, no blood samples, shoe sizes, firstborn child.
Not yet, anyway. Okay.
No, and you know what? It's funny. I had that conversation with another brokerage. We're not going that route. We may introduce one-on-one, like, hey, here's our policies. Can you just acknowledge it? But we're not going to get into that level of scrutiny. We've got, the broker of record is the one that we're holding accountable for the legal side of it. We just want to make it simple and easy to work with Community Trust.
Perfect. What on a refi, Grant? What's the maximum GDS, TDS, and what's your maximum LTV on a refi?
So on a refi, it's 80%. Right now we're 48.50 on the GDS, TDS.
Do you guys allow a second in behind?
So we'll allow a second up to 80% as long as we haven't cut the loan back because of a regulatory requirement. So if it's a non-conforming transaction where we've had to limit the LTV at 65, that's when we can't permit a second behind us. But if it's maybe we just didn't like the real estate, we cut back the real estate, we will allow a second as long as it's disclosed up front and we factor it into the transaction.
Okay. And again, what do you guys consider non-conforming?
So anything for us is when all the applicants' credit scores are below 500, is not conforming. The GDS, TDS is above 60. So while we have up to 50% as our policy, we do have the ability with mitigating circumstances to look at higher TDS. If you've got a client with significant liquid assets, maybe there's something new business that we don't typically factor in. We can look at exceptions, but really it's the credit and the LTV.
Okay. What's your service area?
So we'll lend across Ontario. So it's something we updated in July of this year. We used to only go from London to Barrie to Ottawa. We've now lend across everywhere. We've been lending in Thunder Bay. We've got a deal going on in Minden, which is just northeast of Halliburton. Yeah, we've got lots of great markets that we're opening up to. And so we will lend across Ontario. Where we may scale back is if the real estate. So we find a house in the middle of farms with no neighbors. That might not be a deal that we want to take on. For the record, we'll allow agricultural zoning as well, as long as it's a residential home. So again, I live in Orangeville. You take the road up to Shelburne. There's all these beautiful subdivisions with agriculturally zoned homes, but there's lots of houses side by side. We'll look at those. We may scale the LTV back a little bit based on marketability, but we technically will lend across Ontario for strong real estate.
So a couple of things. Do you guys do HELOCs or do you guys do rentals in a holdco?
So rentals in a holdco, not at this time.
Okay.
HELOCs, we do a HELOC up to 65% in first or second position, yes.
Okay. Will you do, is it a HELOC on a rental condo?
HELOC on a rental condo. I believe right now our HELOCs are only on owner occupied. Heather, correct me if I'm wrong on that one? I don't think. I believe it's only on owner occupied at this time.
Just unmute her. Go ahead,
Yeah,
Heather.
I'll double check for you, Grant. Sorry.
I'll get back on that question. I'm 90% sure, but I think it's HELOC and owner occupied right now.
Okay.
We'll also do, just so everyone knows, we'll also do second mortgages. So Community Trust will do second mortgages behind, we don't typically go behind private or alt lenders, but we'll actually do it if it fits our policy. The clients they don't want to break their first because of the penalty. We'll actually do a second mortgage up to 80%. And the rate on that is $699 with a 2% fee split between Community Trust and the broker. All of our normal policies. So if we would have done that deal up to 80% as a regular deal, we'll actually do a second mortgage up to 80%. So the client can keep their first in for that.
Grant, do you have a maximum number of properties for people for rental for deals?
So today it's 4. As of December 1st, it will go to 6 with 5 of those being rentals.
Okay. Okay. Now, would you look at it on a case by on exception, like on a case by case? Would you look at going outside of that, or is it that's the line?
That's the line for us right now.
Yeah. All right. What's your maximum loan amount?
We don't have one.
Nice.
So we don't have one. I quoted on a $3.1 million deal the other day. We don't have a maximum mortgage amount. And we're pretty aggressive with our loan to values as well. So right in the GTA, we'll do a full LTV up to 80% of a $2 million property. After 2 million, we'll start to scale back a little bit, but not fully to 65. We'll do, I think I saw one that was 5.5 million. I think we're at 71%. So again, if you've got a big deal like that, I'd encourage you to reach out to either the BDM partners or even myself. We can have a conversation on that. We will ask for some docs up front because it does have to go up the chain, and we'll probably give you the pricing to make sure that the client's on board with that before we go all that way through. But we typically only add 1/4 to 1/2% above our our 2 million mark. Not to put another, I'm not going to talk about another lender, but we had a deal where the broker had a quote from another large alternative lender, and it was at 499 with a 1% fee. We came in at 349 with a 1% fee.
Oh, wow. Awesome.
So just to give you an idea.
So couple, do you have a minimum population for smaller properties or smaller areas, sorry?
No, so we don't have a minimum population. So again, we'll, if it's something really small, we'll have a conversation. Yep. Typically, outside of the major urban centers, we might just start scaling back based on the overall file. But yep. If you've got a small location, just reach out to the partners team or your BDM, and we'll run that property through and give you a quick answer.
Okay. Do you guys do student rentals?
No, we don't do student rentals, but we will do an owner-occupied property that has perhaps a few rooms rented out to students. So if you've got an individual that lives in a house and maybe rents 2 or 3 rooms out to some students on boarding income, as long as we can get a lease agreement at 3 months bank statements, we'll even use that rental income, but it has to be owner-occupied.
Okay, awesome. So yeah, just what's an average turnaround time on your refis?
So from the credit decision or full turnaround?
It just says, well, yeah. So what would be your average full credit decision, then full turnaround? Kind of how would that work in terms of what do you know?
So our volume is a little high right now. So we're pushing 48 to 72 hours on a turnaround time right now. Yep. We are the lowest rate in the marketplace right now from what we see. So we're seeing that. If it's also broker notes help on that, I'll put that plug in there. The more notes you give us, the faster the turnaround time is, because the 2 to 3 days is trying to get a hold of a broker sometimes. I saw a deal in the other day. It said business name BFS. That was it. No idea what the broker did for a living, or the client did for a living. So that.
Why do you have to know that, Grant? Like, why do you got to be so nosy?
You know what? I know we're even trying to stop asking the clients their name. Credit. Ooh, I'm joking. But the more but if we can, what you're normally seeing right now is about a 4-week, 30 to 35 days is what we're seeing on a refinance from submission to fund. But that's including, but we've also seen it reduce because of our new Insta value, because we're saving that 5 to 10 days on an appraisal now.
Okay, so yeah, so that includes actually just looking at the documents as well, right? So
everything, about 30 days all in, and that's, again, some of our broker partners, we're seeing 2-week closings if they're getting docs up front. So it's a matter of when we get the docs as well.
Yeah, guys, and please get documentation up front. Make your lender's job easier, and then because we want to go to a point hopefully where the entire file comes out and the commitment comes back and they've already looked at stuff. So it's hopefully we can get that soon. All right, it looks like so Heather's answering some questions there. Great. So Grant's gonna send me this presentation. I'm gonna post up his and Heather and their other BDM's contact information on the group page. Grant's and I think Heather's on the group page as well. So feel free to ask them questions there. They're all on there, so that's where you have most people going. But Grant, thanks for coming on today, man. That's awesome. I really appreciate it.
No, thank you, David. Thanks everybody. Again, reach out anytime between myself, Heather, partners team. Happy to help any way we can, and love to get feedback, good and bad. That's how we learn. So if you've got opportunities to share information, please don't hesitate.
Fantastic. Awesome. Thanks, Grant.
Take care, guys.
Yeah.
Bye.
Hey, everyone. Well, Grant, thank you so much for being on today. Obviously, so next week again, so Tony and I, guys, we're going to be right across Canada. So again, next week, 1 o'clock. So our next meeting's at 1 o'clock. Great business planning session. You get a really special treat to have Wayne Einhorn, very, high priced, speaker we're bringing in. So we're doing a really good thing for us. But please make sure you're on. We'll be posting it up. How long is next week's meeting going to be, AJ? Probably like an hour and a half. About the same, probably 1 hour and a half. Not too much more. So yeah, we'll be there. I don't know if Tony, you have any closing remarks or anything else you wanted to add? Or?
No, I think it's great. I appreciate everybody coming on. I know it's a holiday. Enjoy your balance of the day. And you know what? When David sends it out, I'll post it on our team Facebook also, and we'll send it out. Okay.
Awesome. Thanks, everybody. So I'll send you out to Tony's the CT stuff, so everybody will have everything. Okay. Thanks, everyone. Have a great day. Okay.
All right, Gabe. All right, guys. Take care.
I know.